Hi everyone, let's go over my low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin, but starting this time with the volume profile range from the beginning of this range on the 14th of March to where we are today. You can see that price is hovering just above the value area high, and if price can find its way below the value area high, then the probabilities are quite significant to go to at least the point of control sitting at 28k. And as you can see, we also have a support area around the point of control because there is also a golden pocket in that same area taken from this low to the high over here, and then put it on the golden pocket, and you will see some nice confluence between the point of control and the golden pocket between 27.8k and 28.2k. It does mean that price has to go through this support area over here sitting between 28.8k and 29.1k, so that is the first area of support. If we then go to the low time frame, there is two scenarios over here, but they actually have the same result. So in this scenario, we're either looking for the yellow count in a WXY, which is a count where all the waves are three-wave structures. The most common target for wave Y is between the 1 and the 1.236, taken from the high to the low of W to the high of wave X. In this scenario, you can see wave Y is in nice confluence with the 29k support, and the rare target for wave Y is the 1.618 sitting at 28.1k, which is in confluence with that support I just mentioned with the volume profile, with the point of control over here as well as the golden pocket. So that is quite nice, but nonetheless this is a rare target, with this one being the common target. However, because this wick over here took the high on the left, we could also have a regular flat, which is a 3 and then a 5-wave move to the downside, where this is a wave 1 followed by a corrective wave 2, and then we'd be looking for a 3 towards the downside. Now the most common target for a regular flat, however, is the blue target box that you see over here, taken from the high to the low of A to the high of B, and you can see it's very similar with the most common target area of wave Y. Again, confluence also with the blue target box that we have around 29k. However, if in some way this becomes an extended impulsive structure in a wave C, we do have to think about deeper structures. The 1.618 is also one of those targets, hovering just above that support area that we have with the point of control in the golden pocket between 27.8 and 28.2k. If this doesn't hold, the next area of interest for me is going to be all the way down here between 26.2k and 26.5k. That would be very, very deep because, again, the most common target for a regular flat is this area. And if you want to know the high of B, take a fib from the high of A to the low of wave A, toggle on the regular flat wave B target areas, which are the 0.9 to the 105, with the 0.9 being a rare target and the 1 to the 105 fib being a common target. And you can see this wick ended perfectly inside of that area, and that's the reason why one can also think about a regular flat. But the result is the same, right? We're still looking in both of these scenarios for a move down. The biggest thing that you have to look for is the volume and the impulsivity of the move towards the downside, because in a wave Y, what you're looking for is a 3 and then another 3-wave structure to the downside in wave Y, where the volume is quite similar to the volume that you've seen in this range so far. So nothing too crazy, but in a wave C and then an A, B regular flat and then a wave C, you want to see volume picking up, because if this is a wave 1 and this is a wave 2, you now want to see a straight line to the downside, not a 3-wave structure. You now want to see a straight line to the downside, volume increasing as well, and the impulsivity increasing as well, right? A sort of like parabolic move to the downside for a wave C. And if this is only wave 1 and this is wave 2, you can expect a wave 3 to go quite deep. So let's wait and see how price is going to approach the 29k area if it gets there, right? Because it's all about probabilities, but at the moment the bearish scenarios look better than this bullish scenario over here, because in the bullish scenario we would be expecting a continuation to the upside, meaning that the 3-wave structure, corrective structure, is already finished. We're looking for a continuation in an impulse. In this particular scenario, this then has to be a wave 1 and a wave 2 followed by a second 1, 2, and then you'd be looking for a bigger 3 towards the upside. Couple of things going on here. First of all, this wave 1 looks very 3-wavy instead of like a nice 5 impulsive move towards the upside for then a 5 like in a wave 1, 2, and then another 5, 2 continuation. So that's not very nice. You can have a 3-wave structure, but only in a diagonal. And then in a diagonal, the contracting diagonals are by far most common. But if we have a diagonal, with this being wave 1, 2, and then 3, 4, 5, you can already like see the problem, but this move to the upside is longer than this move to the upside, and that's not allowed in a diagonal. The second wave 1 has to be shorter, preferably in a diagonal. If this is a 1, 2, 3, 4, 5, that is. In a potential 1, 2, 1, 2, it is possible, but then you want this to be a 5 wave move and not a 3 wave structure, so that invalidates a potential 1, 2, 1, 2 scenario. And also with a 1, 2, 1, 2, you prefer to see contracting trend lines. The second thing is if we zoom into this blue wave 1 over here, you can't really count a nice like 5 wave impulsive structure in a 1, 2, 3, 4, 5. Where is wave 4, right? You could possibly think 1, 2, sideways, 3, 4, 5, but usually a wave 3 has the most volume in an impulse, and clearly the most volume is in this move to the upside. So you preferably in an impulse want to see a 4 and then a 5 to the upside on lower volume, but we never got that, right? And this move is too deep for this to be a 1, 2, 3, 4, 5. So that also invalidates a potential 1, 2, 1, 2 scenario. And then finally, this wave 2 is very, very long and also reached the golden pocket. And because of the time of this wave 2, it's more like reminiscent for potentially a wave B instead of a wave 2. If you go to the micro, then this is what we've been looking for, right? A WXY scenario in a correction, WXY with over here, wave X, very nicely respected from the high to the low to then again the high. So the target area for wave X was nicely respected. And then for wave Y, we were looking for the yellow area over here, which also has been nicely respected on the 1 hour. On the 1 hour, the candles close inside. On the lower time frames, it doesn't, but that's no problem. We we got the gap over here, so we had a bit of a gap left. Now the gap has been filled. Still have a little bit of an order block that is untouched between 31.07 and 31.240. So if price would return to the upside, this is an area to look for, but preferably it does not. If we then zoom in the morning, I was talking about this order block over here for if price goes back to the upside. This order block is going to be the first area of resistance that I would be looking for, which was tapped over here for then a move to the downside. I mentioned it very shortly in my morning update, and then later, right after my morning update, I mentioned here as well some other confluences in the update section in the YouTube Silver membership. We had the order block, value area high. We have a golden pocket over here. Now the value area high and the golden pocket have not yet been touched, as the value area high is at the high of this white horizontal box, and the golden pocket is also just above. So we didn't yet hit these confluences. So potentially if price moves to the upside once more, then this area again is going to be an area of interest for then potentially a move to the downside. If we then zoom in to the CVD, then the bullish CVD divergence over here played out. We took the highs, very nice. And then locally, there's some interesting stuff going on. So first of all, we do have, actually forgot to put them on the chart, but we do have bullish CVD divergences. One would think, however, I mentioned in my previous video that price moving to the downside, creating bullish CVD divergences, higher low on price, lower low on the CVD, it's not something that personally I would use for my trading, because after a strong rejection over here and a strong move to the downside, I prefer to wait for price to stabilize, right? And if we go to the AGGR chart over here, you can find the template and everything in Discord, but also the video where I explain CVD in my end screen of this video. But if we look over here, you can see higher low on price, lower low on the yellow CVD, right? A bullish CVD divergence. But I mentioned as well that this is not something I would personally trade from. And if I go to the text here, right, we did get more bullish divergences with the drop, but I'm not sure how trustworthy these are. I prefer seeing divergences after the high we got yesterday. So meaning the divergences after on the right side of this high. So no divergences with the left side of this move, but only on the right side. That's what I would be looking for personally. And we did have some bullish CVD divergence over here, higher low in price, lower low on the blue CVD. Bullish CVD divergence has already played out as price took this high over here. So that is neutralized. But what we then saw as well is as price took this high with these candles, we then have a lower high on price with this little 15-minute range, 5-minute range, lower high on price. However, we got a higher high on the yellow CVD. And you can see it if you look at my horizontal cursor. Then you can see on the right side, the yellow line crossed my cursor and that means lower high on price, higher high on the CVD, which is a bearish CVD divergence, where then the target is this low. And if we zoom into the 5-minute, then while price was rejecting over here, moving to the downside at the order block area, then what you saw once more is here, lower high on price, little higher high on the yellow CVD, bearish CVD divergence, and now in blue, lower highs on price, but then in blue, higher high on the CVD. So while price is moving to the downside, bearish CVD divergences started to appear. So that is very, very interesting indeed for then absorption of longs and a potential continuation to the downside, which then supports the bearish scenarios that we have. We have news coming as well later this week, tomorrow and on Thursday. As you can see, this is Central East European time, so make sure you trade safe. And then finally, the probabilities. Well, probably as you know and figured by now, probabilities for me are towards the downside on both the low time frame and the micro scenarios. On the low time frame, either or, WXY, ABC, it depends on the move we get to the downside. And on the micro scenario, preferably this is the end for a WXY, and we're going to be looking for a move to the downside. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, which is the CVD, with also a one-pager of the CVD in my Discord. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.